Welcome back, guys. It's Dominic here at Cameron James. I'm CEO and independent financial advisor. Welcome to our channel today. Today, we're going to be discussing UK pension transfer. So outlining what a UK pension transfer is, why somebody might consider it, and what steps are involved and what solutions you can transfer to. So first of all, what is a UK pension transfer? Well, it's fairly obvious. You're transferring your UK pensions. Now, why might you transfer your pensions, or why might you consider transferring your pensions? Say you're 55 and you live in New York, or you live somewhere else. You may have spent 30 years working in the UK in which you built up numerous pension pots. You might have a couple of defined contribution pension pots. You may have one or more defined benefit pension pots. As you start approaching your retirement, hopefully you're planning to retire at 60 or 57, suddenly you have to start realizing, hang on, I've got 5 pension pots all in different places with different schemes, different paperwork. This is a bit of a mess. How are they managed? What are the costs of each? What was the annual performance of each? Unless you're very good at Excel and you got some macros, you're unlikely to have this data to your fingertips. So it's a little bit unusual if you think about it. When you have your house or your mortgage, you know exactly how much your house is worth. You know exactly what the household costs are. You know what the performance of the house has been in terms of the housing market. But very few people know anything about their UK pensions. It's just something they signed up on page 27 of their contract in 1972, and now they still have it. But what you have to ask yourself is, if you were going to the market now, would you choose that company? Whoever that company might be, you've probably never even heard of them. Does that mean they're the best UK pension out there? Probably not. They got your business by default by being in connection with your HR department at that company. So one of the main reasons for considering a UK pension transfer is to consolidate everything down. You can consolidate it down. You can be in control of it. You can say, I want to follow an active passive strategy. I want to follow whatever it is. Typically speaking at Cameron James, we'll use a blend of active and passive. Active is very good if you use correct active, and passive is very good because it's cheap as chips. If you put the two together, you can have very good portfolio performance. People might also want to have flexibility over currency. If you live in the USA, you might want to hold it in US dollars. If you live in Europe, you might want to hold it in euros. Another thing is also beneficiaries. You want to be able to pass the money on to your beneficiaries in a simple and easy way. You can just write on your new pension form, I would like my wife to be 50% beneficiary, or my husband and my children to have split the remainder, whatever it is. So there's some of the reasons that you might consider a pension transfer. Now, unfortunately, unless you've been in the industry for 10 years and you've sat all the examinations, you're going to be at an information bias compared to the people that you're working with. When you call up a financial advisory firm, you would hope, you should be able to expect that they know more than you about your UK pension. Now, this can create an issue because obviously you have somebody on the phone or in Zoom or in person advising you what to do with your money, but you don't have as much information as them. So what you have to be able to do is you have to pick out the right company to help you trust the person that you're working with to give you the correct advice, or the advice that's in your best interest. So a UK pension transfer is not a complicated area depending upon which scheme you have. If you have a defined contribution scheme in the UK, it's relatively simple. If you have a defined benefit scheme, it is more complicated. So between the two of those, either way you go down, there's a lot of paperwork to complete in terms of the providers that you work with, also the type of solution that you need to use. So for example, an international SIPP is relevant for a lot of clients. It can be used in Europe, it can be used in the USA. It's very low cost and very simple way to manage your money and to draw it down in your retirement. You also have a QROPS. Now, QROPS have become less and less used over the past 10 years since they were introduced, and the reason for this is that the UK government has been bringing in regulation to bring them more in line with SIPP solutions. For example, a QROPS solution would typically only be suitable for someone in Europe or part of the EEA who intends to live in Europe for a period of 5 years and has a pension pot approaching 1 million. Now, this will change upon your specific situation, so you will need to talk to a financial advisor to understand what is in your best interest. Now, when you're doing a UK pension transfer, I would always encourage you to get quotes from more than one financial advisor. Don't just work with the first one that you picked. I understand that can be easy because you're maybe busy, you've got family, dogs, kids, and whatever to look after, but take your time with a UK pension transfer. If you start working with a firm and everything feels great, just reach out to someone else just in case, just to corroborate that the information you've had so far is correct and the advice fees and stuff that you're paying are also in line with market averages. So that is a UK pension transfer in summary. The steps of doing through the advice process is relatively simple. We go through an advice process, put together a report for you, and then we will consolidate the pot down for you. Now, doing the initial advice is kind of only half the process, or actually I would say less than half the process. The really valuable part of transferring your pension is that you can manage it through your financial advisor over the course of time. This means you go from having a limited range of funds inside your UK scheme to being able to choose from all of the funds in the industry. Now, I must caveat, if you're already working with a SIPP provider in the UK, you may have an unlimited range of funds. For 90% of people who have UK pensions, they're still in their old employer-based schemes and they don't have control. So for example, you might be invested in the balanced portfolio of the UK scheme pension. Now, doesn't sound anything wrong with this, but it's effectively an in-house fund created by that pension scheme, which they probably bought from BlackRock or Schroders for 6 basis points, and they're now charging you, the client, 50 basis points, which doesn't sound that expensive. However, inside your own solution with us, you could just get that product direct from BlackRock for 6 basis points and save yourself a lot of money. Yes, we have an ongoing annual management charge of 1% per annum, but that pays for itself time and time over in the advice that we give our clients in terms of reducing their costs and obviously better performance. So I'm going to keep today's video nice and short. There's lots of other videos you can read on these topics though. For example, final salary pension transfers. You can click the link above to understand that, and you can also click the link above to understand defined contribution pension transfers. Below in the description, again, there's a lot of due diligence on ourselves here at Cameron James, and also the SIPP and QROPS products that you could look through if you want to understand if they're in your best interests. Feel free to leave your comments below if you have any questions. Is there anything you want to ask? We'll get back to you very quickly. Alternatively, if you wish to discuss your own pension with me directly, feel free to book into my Calendly, again, link in description, or go through the website. Hope you found today valuable and look forward to speaking with you soon. Thank you.